Investment analysis of Boliden AB. Boliden AB is identified as a high-quality integrated metals and mining company strategically positioned to benefit from the global demand surge for base metals driven by the climate transition. The company operates world-class assets and has demonstrated resilience through recent operational challenges and market cycles. Boliden is currently undergoing the peak phase of a high-intensity capital expenditure program, primarily focused on the accretive ADA 4.0 zinc smelter expansion. This investment phase is temporarily constraining free cash flow and near-term market sentiment. Based on an assessment of its strategic positioning, projected post-expansion profitability, and comparison against industry benchmarks, the company appears to be trading at a compelling discount relative to its inherent growth potential. The market is not fully pricing in the anticipated earnings surge expected upon the commissioning of its core growth project. Derived 12-month price target context. The consensus average 12-month price target is approximately 406.07 SEK. However, the analysis of valuation metrics suggests a substantial undervaluation, with the current PE 15x significantly below the estimated fair PE 21.9x. Given the low PEG ratio 0.8 and robust forward earnings growth estimate 18.36%, a price target approaching the higher analyst estimate of 500 SEK is justifiable as the ADA catalyst is realized and the valuation multiple converges toward the fair value benchmark. 1.2. Core value proposition and risk-adjusted growth profile. Boliden's fundamental value proposition is rooted in its integrated structure, which encompasses the entire metals value chain from exploration through mining, concentration, smelting, and recycling. This integrated model provides operational flexibility, allowing the smelter segment to process complex ores and materials, thereby mitigating price and supply risks associated with relying solely on concentrated material markets. The company focuses on producing base metals, zinc, copper, lead, nickel, and precious metals, gold and silver, all of which are recognized as essential materials for modern society and critical for technologies driving the climate transition, such as electric vehicles and batteries. Boliden's assets are geographically concentrated in politically stable European jurisdictions, Sweden, Finland, Ireland, Portugal, providing a degree of geopolitical risk mitigation compared to global peers. The current valuation profile demonstrates a structural discrepancy. Boliden is priced at a forward PE of 15.2x, which is notably below the peer average of 19.1x, despite possessing an above-average estimated earnings growth rate, 18.36%. This results in a highly attractive PEG ratio of 0.8x, indicating that the stock is intrinsically undervalued on a growth-adjusted basis. This discount is seen as a short-term market reaction to the current heavy capital expenditure cycle and execution timelines, rather than a reflection of diminished long-term potential. 2.1. Integrated metals value chain and product portfolio. Boliden maintains a dual role as a leading miner and a high-tech metal producer. The company sources complex ores containing several different metals, which are then separated and refined in smelters through processes including calcination, leaching, purification, and electrolysis.
The product portfolio is essential for high-tech applications. Principal finished products include zinc ingots, copper cathodes, lead ingots, and gold and silver granules. The sophisticated smelting processes also yield economically valuable byproducts such as sulfuric acid, zinc clinker, and palladium concentrate. The integration of the smelter segment is also strategic in the circular economy, as Boliden is a market leader in electronics recycling and recovering lead from car batteries. This ability to manage complex raw materials stabilizes margins and ensures a reliable supply chain for critical, high-quality metals. 2.2. Operational footprint and asset quality. Boliden operates 6 mining areas and 5 smelters across the Nordic region, Ireland and Portugal. Its operations are characterized by world-class productivity driven by continuous development in mining techniques and maintenance technology. Several assets are central to the company's strategic position in the European market. Boliden Aitik, recognized as the world's most efficient open-pit copper mine. Boliden Garpenberg, cited as one of the world's most productive underground zinc mines. Boliden Tara, the largest zinc mine in Europe. Boliden Somincor, Portugal, and Zinkgruvan, Sweden, important assets acquired to further strengthen copper and zinc production. The mines in the Boliden area, such as Renström and Kristineberg, produce complex sulfide ores containing zinc, copper, lead, gold, and silver. Notably, the Kankberg mine produces tellurium, which is utilized in solar cell production, highlighting the company's linkage to cutting-edge clean energy technologies. 2.3. Historical context and corporate resilience. Boliden's modern identity was forged by a series of strategic transformations. The company, which traces its roots back to 1924, significantly reshaped its scope in 2003 through the acquisition of the base metals mining and smelting operations from the Finnish company Outokumpu. This deal brought the Harjavalta, Kokkola, and Ada smelting plants, along with the Tara zinc mine, into the group, establishing the integrated model prevalent today. The company has a proven institutional capacity to manage and recover from severe operational disruptions. For instance, the company successfully navigated crises like the Los Frailes tailings dam disaster in the late 1990s and, more recently, the destructive fire in the Rennskär tank house in 2023. This history of recovery demonstrates robust business continuity planning and engineering competency. Furthermore, the adoption of the New Boliden Way, NBW, based on lean management principles, beginning in the late 2000s, has been instrumental in developing continuous operational improvements and stable processes, providing a foundation for high efficiency. 3. Financial Performance Analysis 2020 to 2025. 3.1. Revenue and Profitability Trend Analysis, FY 2020 to FY 2024. Boliden's financial performance over the past 5 years reflects the cyclical nature of commodity markets coupled with internal growth initiatives. Revenues escalated from SEK 56.32 billion in 2020 to SEK 89.21 billion in 2024. Correspondingly, operating profit increased from 8.94 billion to 13.69 billion over the same period, demonstrating a strong correlation between top-line growth and operational profitability. The trailing 12 months, TTM, show robust operational effectiveness, with revenue reaching SEK 91.16 billion and EBITDA standing at 19.25 billion. Profitability ratios indicate a profit margin of 8.83% and an operating margin of 14.73%, TTM. 3.2. Q3 2025 Earnings Deep Dive, The Gold Effect. The Q3 2025 results reported an operating profit, excluding process inventory revaluation, PIR, of SEK 2,752 million. While this represented a slight decline from the SEK 2,999 million reported in Q3 2024, the performance critically exceeded analyst consensus expectations by 11%. This outperformance was fundamentally supported by an unprecedented surge in precious metals prices, specifically gold, which reportedly reached historic levels of $4,000 per ounce in October 2025. This dramatic increase effectively transformed the company's revenue profile. Gold and silver, traditionally minor byproducts of the complex sulfide ore mining process, were elevated in importance, becoming the third and fourth most significant metals affecting overall earnings. This structural shift in revenue weighting demonstrates a significant financial stabilizer. The embedded precious metal production acts as a highly effective counter-cyclical financial buffer during periods of volatility in base metal prices or operational headwinds. 3.3. Cash flow strength and capital allocation decisions. Financial liquidity saw a substantial improvement in Q3 2025, with free cash flow surging dramatically to SEK 2,284 million, a sharp turnaround from the negative SEK 495 million reported in Q3 2024. This rapid increase in cash generation underscores the underlying strength of the core business, despite high capital demands. Capital allocation during this period reflects a disciplined strategy focused on maximizing future accretive returns. The company proposed an ordinary dividend of SEK 0 for 2024, a significant deviation from the SEK 7.50 paid in 2023. This decision, made despite the stated policy of maintaining a dividend corresponding to 1/3 of net profit, indicates that capital is being prudently retained to fund the substantial, near-term capital expenditure commitments, estimated at SEK 15.5 billion for 2024 and SEK 13.5 billion for 2025. This prioritization ensures the successful completion of the high-yield ADA expansion, confirming a rational and disciplined financial approach. 3.4. Balance sheet and leverage profile. Boliden maintains a conservative and highly manageable leverage profile. Total debt stands at SEK 24.00 billion. At the close of 2024, the net debt-equity ratio was 16%, comfortably below the company's internal target of approximately 20% during an economic upturn. This low level of financial leverage provides significant flexibility to withstand commodity price downturns, absorb unexpected operational costs, or pursue new growth opportunities. IV. Growth Catalyst, the ADA 4.0 expansion. 4.1. Project scope and strategic rationale. The ADA 4.0 expansion project represents the single largest near-term growth catalyst for Boliden. The primary objective is to increase the ADA zinc smelter's annual production capacity by 75%, raising output from 200 kilotons to 350 kilotons of zinc per year. This significant capacity boost reinforces Boliden's position as a dominant, technologically advanced producer of zinc in Europe, utilizing its flexible processes to extract additional byproducts.
The project involves comprehensive modernization and expansion, including a new roasting facility, a new sulfuric acid plant, and the expansion of the leaching, purification, and tankhouse infrastructure. Additionally, critical ancillary investments in enhanced electricity supply and quay infrastructure were necessary for the expanded operations. 4.2. Execution risk and financial adjustments. The execution of the ADA expansion has encountered delays. The start of the ramp-up phase, originally scheduled for Q4 24, was postponed to the end of Q1 25, primarily due to delayed construction works, particularly in the roasting facility. Full production is now expected to be achieved successively throughout 2025. This delay resulted in an additional €100 million increase in the project's cost. However, a key element of the financial assessment is the company's confirmation that the projected annual EBITDA generation of €150 million remains consistent with previous communications. This return calculation is based on Boliden's long-term price assumptions and aligns well with current market conditions. The persistence of the strong return forecast confirms that while short-term execution risks materialized in delays and cost increases, the project's fundamental, long-term accretive value proposition remains intact and exceeds the WACC hurdle rate. 4.3. CapEx intensity and future deleveraging. The peak capital intensity associated with ADA is reflected in the high CapEx guidance, SEK 15.5 billion for 2024 and SEK 13.5 billion for 2025. The strategy to temporarily suspend the ordinary dividend is a direct consequence of this major capital commitment, ensuring that the balance sheet remains strong throughout the investment phase. Upon completion of this high-intensity cycle and the achievement of full production at ADA post-2025, the addition of €150 million in annual EBITDA is expected to trigger a significant recovery in free cash flow yield. This substantial free cash flow generation will not only strengthen the balance sheet, but also enable the company to resume its shareholder return policy, including the standard 1/3 net profit dividend payout. 5. Valuation analysis. Boliden's valuation metrics suggest that the stock is currently discounted relative to its fundamental value. The current PE ratio of 15x is markedly lower than the estimated fair PE ratio of 21.9x. This substantial difference implies that the market is applying a temporary discount to Boliden's earnings, likely due to the ongoing high capex cycle.
Furthermore, the growth profile is compelling. With strong estimated earnings growth, 18.36%, Boliden's price-to-earnings growth ratio stands at 0.8x. A PE ratio below 1 is conventionally interpreted as a strong signal of growth-adjusted undervaluation, confirming that the current PE multiple does not adequately reflect the projected earnings expansion. 5.2. Peer comparison and multiples. Boliden is favorably positioned against its competitors in the European metals and mining industry. The stock trades at a forward PE of 15.2x, which is below the industry average of 16.5x. Comparing Boliden (BOL) with KGHM Polska Miedz (KGH), a major regional producer, Boliden maintains a lower PE multiple, 15.2x versus KGHM's 16.6x. While KGM shows slightly higher estimated growth, 22.19% versus 18.36%, the persistent discount applied to Boliden valuation can be understood as the market pricing in the company's inherent structural complexities, including managing multiple commodity price exposures and its notable sensitivity to European energy costs. 5.3. Discounted cash flow context. The long-term value creation potential is anchored by a disciplined project evaluation framework. Boliden requires that all major long-term projects yield returns exceeding the weighted average cost of capital, WACC, which is set at 12% nominal before tax, 10% real. The successful confirmation that the ADA expansion meets this investment hurdle, despite cost overruns, validates the basis for future discounted cash flow modeling. The significant range in analyst price targets, 320 SAK to 500 SAK, illustrates the high degree of uncertainty inherent in valuing a company with an unhedged commodity price policy. This uncertainty underscores the importance of accurately forecasting long-term metal prices and the precise timing of the ADA expansion's full earnings contribution. V. Investment risks and mitigation strategies. Commodity price and FX risk management. Boliden's strategic risk profile is amplified by its core policy not to hedge general metal price exposures. Profits are designed to fully reflect price changes. This positioning means the stock functions as a high beta play, offering maximized exposure to commodity cycles. Its beta is 0.91. While the broad commodity exposure is unhedged, the smelter segment manages specific transactional risks by hedging the price exposure of payable metals during the processing period, the time between raw material purchase and finished metal sale. Furthermore, pricing for most products is set in USD. Transaction exposure related to this USD pricing, as well as future investment payments in foreign currencies, is managed through the use of forward exchange contracts under defined circumstances. 6.2. Energy price sensitivity. Energy accounts for approximately 17% of Boliden's operating costs, making it a critical financial risk vector. Price volatility in the electricity market directly impacts operating profit. Mitigation measures are inconsistent across the portfolio. The ADA smelter in Norway has a critical long-term electricity agreement with inflation-adjusted pricing. However, the key operations in Sweden, Finland, and Ireland rely on contracts with shorter terms, leaving a material segment of the business vulnerable to high and volatile market energy prices. This exposure represents a trade-off. The company's extensive use of electrification drives its superior low-carbon performance, but simultaneously links operational costs directly to the fluctuating costs of Nordic power grids. 6.3. Regulatory and geopolitical risk. Boliden faces both legacy environmental risks and future regulatory challenges. The toxic smelter sludge dumping incident in Arica, Chile in the mid-1980s remains a historical marker, illustrating the high-cost, long-term nature of environmental liabilities within the smelting industry. In a contemporary context, the greatest regulatory hurdle is alignment with the European Union taxonomy regulation. Despite being a pioneer in low-carbon production, Boliden's core activities, mining and smelting, are not yet included in the taxonomy framework. As such, only minor portions of its business, logistics, real estate, are currently taxonomy eligible. As the EU is actively developing technical screening criteria for non-ferrous metals, Boliden will eventually face mandatory requirements to prove taxonomy alignment for its core assets. Until full alignment is achieved, the company could face potential limitations in accessing specific green finance mechanisms or greater scrutiny from ESG-focused investors. 7.3. Circular Economy and Innovation. The company plays a central role in the European circular economy by being a leader in the recycling of used lead batteries and scrapped electronics.
Strategic innovation is also key to minimizing waste and creating value from residual products. Boliden has developed smelting, a new cement substitute material. Smelting is manufactured from slag generated at copper smelters and from mining waste rock. This initiative exemplifies a shift from waste management liability to high-value materials production, creating new revenue potential outside the core commodity cycle while increasing overall resource utilization. 8. Conclusion. Boliden AB presents a structurally attractive investment case, providing high-quality exposure to the non-ferrous metals essential for the ongoing global climate transition. The integrated business model, anchored by world-class Nordic assets and resilient, complex smelting capabilities, acts as a hedge against external market fluctuations and operational risks. The company's high capital expenditure phase, necessary for the highly accretive ADA 4.0 expansion, is the primary reason for the current market valuation discount, reflected in the low PE multiple, 15x, relative to both the industry peer average, 19.1x, and its estimated fair PE, 21.9x. The temporary dividend suspension and short-term project delays are viewed as prudent decisions that prioritize long-term financial health and guaranteed returns, EU 150 million annual EBITDA from ADA, over immediate shareholder distributions. The investment risk is mitigated by the company's strong balance sheet, 16% net debt equity, its conservative capital structure, and the stabilizing effect of its strategic precious metals co-production. Investors with a medium to long-term view, 12 to 18 months, should acquire the stock while it is trading at a discount. The realization of the ADA earnings catalyst in 2026 is expected to result in a substantial re-rating of the stock, leading to multiple expansion and significant free cash flow generation, enabling the resumption of the standard dividend policy.